Before the opening bell, U.S. indices closed lower on Friday on fears of an inverted yield curve pressured by shares in consumer durables and apparel, banks, and material sectors. On the economic docket market, U.S. manufacturing PMI declining to 52.5 in a preliminary read in March from 53 a month earlier, and services PMI decreasing to 54.8. Also, wholesale inventories advancing 1.2% month over month, existing home sales jumping 11.8% month over month, and the monthly budget posted its biggest monthly deficit on record at $234 billion in February. This all as 85% of SP 500 constituents traded lower Friday. Now, after the markets closed, there's no major aftermarket news to report, so we go straight to today's expectations. Red Hat fourth quarter EPS seen at $1.01, while turning overseas, Asian markets plunging today. The Nikkei down 3.01%, the Hang Seng down 2.03%, China CSI 300 down 2.37%, South Korea's Kospi down 1.92%. European markets trading lower but off their intraday lows, while U.S. futures call for a slightly negative start. Now, in terms of expectations today, 8:30 in the morning, we have the February Chicago Fed National Activity Index, 10:30 in the morning, the Dallas Fed Manufacturing Index. While taking a look at the markets, the SP 500 is where we begin. That sees its key resistance at 28.14, and that's in focus. The break below 28.14 is a negative signal that has opened the path towards 27.86. Short positions below 28.14 are favored, with targets at 27.86 and 27.66 in extension. The Nasdaq, meanwhile, is expecting 72.10, while the Dow Jones sees its key resistance 25,600.